On 1 September 2018, ISO Limited placed a cancelable order amounting to $100,000 to purchase inventory from a supplier in the USA. The inventory was shipped free on board at the agreed port of departure. The inventory was delivered to the agreed port of departure on 28 September 2018. The inventory was loaded on the ship on 28 September 2018, but the ship only departed to South Africa on 10 October 2018. ISO obtained control of the inventory on 28 September 2018. Therefore, we know that this will be our transaction date and 1 September will be our order date. Therefore, you need to know that you will not recognize the inventory on order date. You have to recognize this on our transaction date. And what we need to identify, this $100,000 is a foreign creditor. Therefore, we need to remeasure this at each year end at spot rate. The debt was payable as follows: 1 December 2018, 70,000, and 15 January 2019, 30,000. 30% of the inventory was sold by 31 December 2018 on credit, while the other 70% was sold during the year ended 31 December 2019 for cash. ISO Limited had no closing inventory on 31 December 2019. The applicable exchange rates were as follows. Now, when you look at this, we need our transaction date, 28 September 2018, R8.78. And then, guys, important, we will have to remeasure our foreign creditor on 1 December 2018. Therefore, we will have to remeasure our foreign creditor, the portion that we will have to pay before we recognize the payment. Then our year end is 31 December 2018, R8.72, and our second payment date, 15 January 2019, 885. Additional information. In the company's policy, it is the company's policy not to hedge its foreign currency exposure on foreign currency transactions due to the fact that these transactions take place on an ad hoc basis. As a result, ISO Limited did not take out any forward exchange contracts to hedge its foreign currency risk on the future payment of the foreign creditor. Assumed time value of money relating to the foreign creditor is not material. Required. Prepare the journal entries in respect of the above transaction for the years ended 31 December 2018 and 31 December 2019. Round off all amounts to your nearest rand. Ignore any normal income tax implications. Ignore VAT. Your answer must comply with IFRS. Now, my first step with a foreign currency transaction will be to include my timeline. As always, I recommend that you please plan your attempt. My first step, I will include my timeline with all of the important dates. Now, when you look at my timeline, we have identified that our order date is 1 September, but we do not recognize any journal entries on this date. We need to recognize our transaction date journal entry on 28 September 2018. Then we have a payment date of $70,000 on 1 December 2018. Our year end is important. Why? Because they've indicated to us that 30% of our inventory was sold. Our second payment date is on 15 January 2019. Important to us. And then our second year end, 31 December 2019. Why important? Because 70% of the inventory was sold. Therefore, when you look at my steps, my second step, I need to identify the different transactions of which I need to recognize my journal entries. Now, this is what we have done just now. The only thing that I want you to include is that you need to know that before we pay the 70,000 and the 30,000, we need to first remeasure the foreign currency at spot rate. Now we are able to identify our journal entries that we need to include. I've included our journal entries to save us some recording time. Now guys, don't get confused with the screen. I want you to look at the timeline in the middle of the screen. Our first journal entry will be on 28 September 20.18. Remember, this is our transaction date. Therefore, we need to recognize our inventory and our creditor. Our inventory will increase, debit, credit, creditor. And this will be the 100,000 times 8.78, which is our spot rate on transaction date. 8.78, and this will be 878,000. Then, when you look at the timeline, on 1 December 20.18, we pay 70,000. But we need to remember that we will first have to remeasure our foreign creditor and then recognize our payment journal. Therefore, on 1 December 20.18, when we need to remeasure our creditor, you need to identify what was the value of your creditor. And this was the 878,000. And what is the value now? Our value now will be the 100,000 times the 8.80. When you look at our timeline, our spot rate on 1 December 20.80 is 8.80. Therefore, our value now will be 880,000. Therefore, our creditor increase. When our creditor increase, we have to credit our creditor and we need to debit our foreign exchange difference in our profit and loss. And guys, this will be a loss. This is a debit with a difference which is 2,000 Rand. Then we are able to recognize our first payment, the 70,000 times 8.80 Rand, and we credit bank, debit our data. Now, at year end, 31 December 20.18, we have sold 30%. Now, you will remember they've indicated to us 30% on credit sold 20.18, and for 20.19, the 70% was sold cash. Now, guys, we do not have the details in terms of our sales. Therefore, we can only recognize the cost of sales and inventory journal. Now, on 31 December 20.18, our second journal will be to recognize the sale. Therefore, we will have to debit our cost of sales and credit our inventory as our inventory decrease. Important to identify, our journal entry on 28 September 20.18 was to debit inventory with 878,000. Therefore, 878,000 times 30%, and this is the value that you will use to credit your inventory. Then, because we are at year end and our IAS 21 rules indicate to us that we need to remeasure our creditor at spot rate, which is 8.72. We need to remeasure our creditor. Now again, guys, our creditor was this 30,000, which is the remaining portion, times 8.7. No, guys, 8.80, and this is now the 30,000 times 8.72. Therefore, it was 264,000. It is now 261,600, and there is a decrease. When our creditor decrease, we have to debit our creditor and credit our foreign exchange difference, and this will now be an income, and this is a difference of 2,400. Then again, when you look at our timeline, guys, our next payment date is 15 January 20.19 in terms of our 30,000, And again, we need to remeasure our creditors first. Again, what do you need to do? You need to identify that the 30,000 was recognized at 8.72 Rand. When you look at your timeline, guys, remember 8.72 on 31 December 20.18, and this is now 8.85. Therefore, guys, do you see that this will be an increase in your creditor? It was 8.72, it's now 8.85. Therefore, we need to credit our creditor and we need to debit our foreign exchange loss. Guys, important with these journals, please include your dates. Now we are able to recognize our payment, debit the creditor, and credit our bank, and this is the 30,000 times 8.85. Again, when you look at your timeline, at year end, which is 31 December 20.19, the remaining 70% was sold. Therefore, 878,000 as per our first journal entry on 28 September 20.18 times 70%, and we will have to debit cost of sales and credit our inventory. Therefore, guys, what you need to take from this is include a timeline. Remember to remeasure your creditor and identify all of the transactions on your timeline to enable you to perform the journal entries.